A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a pivotal announcement on July 30th, 2025, the Federal Open Market Committee, FOMC, of the Federal Reserve made headlines by deciding to maintain the federal funds rate within the range of 4.25% to 4.5%. This decision comes amidst increasing pressure from President Donald Trump, who has been vocally advocating for a significant reduction in interest rates. The Fed's ongoing commitment to a tight monetary policy aims to combat inflation by making borrowing costs higher, a move that has not sat well with the president. The federal funds rate is a crucial economic indicator, influencing everything from the interest rates banks charge their customers to the rates on long-term loans, such as mortgages and savings. The FOMC, which meets 8 times a year to set this rate, aims to manage economic stability and inflation. Historically, Trump has sought to influence the Fed's decisions, particularly during the early stages of the COVID-19 pandemic. At that time, he pressured Fed Chair Jerome Powell to lower rates to the lowest possible levels to stimulate the economy. As a result, the Fed reduced the federal funds target range from 1.50 to 1.75% down to 0 to 0.25% in March 2020, maintaining these low rates until March 2022. However, this period of low rates contributed to significant inflationary pressures as fiscal expansions and supply disruptions took their toll. To counteract rising inflation, the Fed began increasing rates in March 2022, ultimately reaching a peak of 5.5% by July 2023. The recent decision to lower the target range to 4.25 to 4.50% in December 2024 reflects a strategic approach to stabilize the economy while keeping options open for future adjustments. Despite the Fed's rationale for maintaining the current rate, Trump has expressed his frustration, stating that the high rates are hindering home purchases and negatively impacting the economy. In a letter to Powell, Trump accused him of costing the country a fortune and insisted on a drastic rate cut. In a recent Truth Social post, he reiterated his belief that interest rates should be at 1% or lower, a stance that economists like Peter C. Earl argue could be destabilizing for housing and asset markets. Tensions between Trump and Powell have been palpable, particularly during a recent visit to the Federal Reserve Bank in Washington, D.C., where Trump openly challenged Powell about the renovations taking place at the bank, suggesting overspending and implying that he would have fired Powell if he were managing the project. Trump's comments reflect a broader frustration with the Fed's policies, which he believes are detrimental to the economic recovery. The decision to keep interest rates steady was supported by a vote of 9-2 among the FOMC members, with only 2 dissenting votes advocating for a 25 basis point cut. The Fed's policy statement highlighted ongoing uncertainty regarding the economic outlook, noting that growth had moderated in the first half of the year. This cautious approach indicates that while the Fed is vigilant about inflation, it is also strategically positioning itself to respond to potential economic shocks in the future. As Trump continues to press for lower rates, the Fed's decision may ultimately provide it with the flexibility to cut rates in response to any unforeseen economic challenges, particularly in light of the tariffs Trump has imposed on imports. Analysts suggest that the Fed's current stance may serve as a buffer against potential inflationary pressures stemming from these tariffs. In summary, the Federal Reserve's decision to hold interest rates steady amidst President Trump's calls for cuts underscores the delicate balancing act the central bank must perform in navigating economic recovery while managing inflation. As the political climate continues to evolve, the relationship between the president and the Fed chair remains a focal point of economic discourse, with potential implications for both domestic and global markets. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.